It's a drop inside of what has been a relatively strong market. How do you read it? Where do we go from here?
Well, Brian, I think you hit the nail on the head. After, anytime you have the worst day in equity markets in a year, you have to maintain some perspective, and you hit on a couple of things. This was probably the best first 7 months for equity markets in the U.S. in the last 20 years. Certainly one of those, and we just came off record highs just about a week ago. So what I do is try to ask myself: has anything structurally changed here? Or is this just kind of taking some cream off the top because of this trade war event? I don't think anything has structurally changed. I think that earnings growth is, some are even projecting that it's going to accelerate in 2020 from a tepid earnings year this year. And essentially, if you look at the jobs number that came out Friday, the job growth continues to remain strong, which is going to be the underpinning there. So I think I still feel confident going forward. I don't think anything structurally changed.
Well, okay, I'll push back a little bit. I guess I feel like it's kids in the playground in recess, and they're jawboning at each other, and eventually one kid pushes the other kid. Now you got a problem, and I wonder if the structural change, Rob, is that we're seeing the trade war ratchet up a bit, that it's not cooling off, it's heating up.
Well, and you talked about the 7-to-1 ratio at the top of the show, and obviously we hope that holds. However, it would be unfair to say that there's not some cost to the Chinese here in manipulating their currency. And it's interesting. The Treasury Department's called out for calling them Treasury manipulators. It's kind of like the policeman in the movie Casablanca saying, "I'm shocked that there's gambling going on here." They have been currency manipulators for years. They always devalue the currency to make their goods cheaper here, so we buy more of them. But there is a cost to them. By doing that, the Chinese are essentially eating our tariffs so that our buyers of their goods don't have to.
They've also, by the way, if weak currencies were a panacea for everything, everybody would just weaken their currencies. The Chinese have a lot of money in U.S. dollar-denominated debt. They have to buy oil in U.S. dollars. So weakening their currency is not some kind of a great outcome. It's a big problem for them as well.
It is. It's a huge problem, and in fact, because now, of course, we're starting to see, could there be some resolution to this trade war? I think the Chinese need a deal far more than the U.S. does. They're, as you just pointed out, where they're hurt in purchases that they have to make. Their stock market has suffered a lot more than ours. So is Trump winning the trade war? I don't think I'd go that far, but China's sure being hurt a lot more by all this than the U.S. is.